Hello everyone and welcome to Day Trader S&P 500. Today is Sunday, June 25, 2023. This is Dale Woodson, editor of Woodson Wave Report and Day Trader S&P 500. As always, we want to get our YouTube subscribers caught up with what our newsletter subscribers have. So we have a lot to catch up on. I want to show you guys first our subscription services there, and we'll start, by far our monthly is the most popular, but we'll start with the annual and some of the things we cover in there, the Dow, Nasdaq, bonds, and gold. So without further ado, let's get into, let's get into the Dow. Let's do this. Let's see what the report says. We'll go that way. Okay, let me get into the July monthly report. I did this early because I'll be out for 2 weeks starting Tuesday. I have limited access to the internet, but I try to get some reports out to the newsletter subscribers and to our YouTube subscribers. We'll try to get, a video out. Okay, this is the S&P cash. This is a daily from the all-time high. You can see the dates and prices are in purple there. The wave count's in black. Okay, the trigger was a 43.25 high back in August. A move above that gave us higher targets. And you can see there, so far the high is June 16th at 44.48 in the S&P cash, and it's just below the 786 retracement of the entire five-wave decline, or wave A, that is B up, and wave C gains a 1.618 multiple at 47.50. So if this 786 is broken, then the next target would be the 1.618 multiple. And let's get into that S&P cash there if we can. Let's make this a little bit bigger here and move this around here. This should pretty much be exactly the same thing. Okay, there's that upside trigger. Our downside trigger now becomes the wave A high of 4,100. All right, and we have a gap here at 42.21, which is on June the 1st, I believe it is. Let's see here. Let me get in there. Yeah, June the 1st, 42.21 was that gap right there. So there's the upside trigger. It was triggered, and there was the targets, and we're pretty near the 786, if you will. Okay, within less than 100 points. We'll see if that high holds or not. Going back to the monthly report, that was our S&P cash. There's our triggers and all the verbiage there. Okay, and then we'll look at the Nasdaq there. Okay, there's a daily bar of the Nasdaq. Let me get into that if I can. There is the Nasdaq. We'll make that bigger, and we will go here. Okay, this is a very similar count. And as you can see on the Nasdaq here, we have 5 waves down, no leading diagonal in this count. We have an A up in parentheses, a B down in parentheses, and a C up. The 618 retracement, and notice the Nasdaq's near the 618, and like the S&P that we just saw is right near the 786. So again, the Nasdaq almost always leads on the way up and leads on the way down. Since this advance is lagging, if you will, the S&P, that tells us that it's probably corrective, and it's not a new bull market, as a lot of people like to think, because if it was, the Nasdaq would be leading. It would be up above the 786, and the S&P would be following or trailing. So far, the Nasdaq is lagging the S&P. Okay, we have a near direct hit on that target within 9 points of the 618 retrace. Okay, so that looks to be complete, or nearly so. That's a daily chart of the Nasdaq composite. Let's go back to our monthly report. There it is. Okay, that's the Nasdaq. There's all the verbiage in there within 9 points of a direct hit of a 618 retrace. There's the higher targets there. Okay, and then we have the Dow, which counts a little bit different than the other indexes. But let's get into that there. Let me open this up here. We'll get into the Dow, close that back up so we can see. And you can see here we have from the all-time high, we have 1, 2, 3, 4 with a leading diagonal, and 5 down for a larger wave 1. We have an A up, a B down, which goes below the start of A, and a C up, which goes above the end of A. That is the definition of an expanded flat. That's what we have right there. From that expanded flat high, we have a 1 down and a 2 up. I did note in the newsletter that this could go further. I think I may have that because this, I think, was a 1.212, and the expanded flat could go higher. Let me go back to the report and see what we have in there. I'm almost sure I did that. Let's see here. Analysis remains unchanged. Okay, yeah. Alternately, wave 2, here it is, may register a higher high, expanded flat at the 1.414 multiple, which is 35,258. So if we can go back to that chart there, we can show you, there it is there. So that would be A up, B down, and C up. This is a 1.212 here, but it could go to the 1.414. If it's an expanded flat, it shouldn't go much higher than that. So we'll allow for that to go higher, knowing that it is a corrective second wave. Okay, let's go back to the report here. We got the bond market, the U.S. 10-year. I don't know if we've updated that lately. Let me get into that. There's the U.S. 10-year. Let's close that out. I think we have, but it bears repeating because it's in a very precarious position, if you will. I think I'll make this bigger like this so we don't have all this overlap here. There we go. Let's do this. That there. Make that bigger there. There we go. Okay, we had 5 waves up from the year 2020 low into this high back in October of 22. We have an A down, that's 5, a B up, that's corrective, and then 5 more waves down for wave C. The ideal target where C equals A is or was 3.075%. Didn't quite get there. And then it looked, and of course, the 382 retracement of the entire 5-wave rise from the year 2020 is 2.810. Not sure that we're going to get to either one of these targets, showing the strength of the move to the upside in interest rates. We have a 1 up. You can see it subdivides into 5 waves. A 2 down that subdivides into an A down, a B up, and a C down. And we have developing a 3rd wave. We have a 1 up, a 2 down, a 3 up, wave 4. At this point has held above the wave 1 high. It's still chopping around. It should stay above the wave 1 high, which is 3.528%, and we need to break above the wave 3 high for this wave 5. The wave 3 high was a perfect 1.414 multiple. You can see right there, it's right above the line, and that's 3.859%. We haven't quite got above there yet. We got 3.845. 3.849 and 3.845 again. Okay, a break above this confirms the 5 waves, and then we'll get to wave 3 up here. Okay, should go to the 3.928%. Okay, so we got a 1 up, a 2 down in parentheses, a 3 up in development, which is apparently 4/5 complete. We'll see how long. 4s, as you know, can be long and sideways choppy things, but it would take a move below this low here of 3.253 to bring these lower targets into play, and up here a move above the wave B high at 4.089% triggers to this target, minimum target for wave 3. If this is 1, you can see it up here. If this is 2, then 3 equals 1 at 7.286%. So that's the bond market there. Let me get out of that. We'll go back, going step by step here from our report that went to our annual subscribers. It goes out once a month and then periodically as market conditions warrant. Usually we get 3 or 4 of those a month. Okay, there's our triggers and targets. Okay, then we get to the gold market. Let me get to that over here. Bear with me while I bring that up, and we'll move this out. We may as well go full screen again because this is going back over some time. Okay, we'll bring those targets in, and I think we're going all the way back to 2015, I believe. Let me get that in there. There's one. Okay. There we go. Okay, let's do it like that. That's pretty darn good. Let me get that low in there. Okay, from December 15, we have a 1 in parentheses up, an ABC correction. Wave 2 down, 2018. Have a wave 3 high. It's a perfect 2.618 multiple of wave 1. And we have an A down, a B up, basically double top right there, and a C down for wave 4. As you see in parentheses, direct hit within 5 points of our Fibonacci target. From there, we have, I'll bring this out like this now. Let's look from this 4 up, okay? There we go. Okay, we have a 1 up, 2 down, 3 up, 4 down, 5 up. Completes 1 of wave 5, the larger degree of wave 5. We're getting a correction now. It's near the 382 correction of 1902. You can see the 50% is 1847. The 618 is 1792, and the 786 is 1713. It should hold above this 1614 low right here. Once this correction is complete, then wave 3 will take off, and our trigger and our target, our trigger was back here, the wave 3 high at 2075.14. We should go at least to 2147. Okay, and if this is 1 and 2, then 3 will go nuts. But let's see that take off. We'll need to move above that May 4th high of 2081.82 to know that this wave 2 correction is over and the wave 3 move up to new all-time highs is in play. Okay, back to, that might be it for the monthly. Yeah, there we go. There's our triggers and targets. Okay, there we go. All right, and that's all that stuff. And then we get into our Fibonacci time spirals. Okay, so that's what we have on our annual subscription here. Okay, and what I usually update is the monthly subscription, which is the analysis of the ES. I want to get into the E minis here if I can. Okay, that's another one that's $89 a month. Let me get into that. Let's see if we have that over here. The NQ, updated that over the weekend. Again, I'll get this out of the way. Okay, here's the Nasdaq futures. Let me get that. Here, let's just do this again. There we go. That makes it all better. Okay, we have a 1, 2, 3, 4, and a 5 into the October low for wave A. We have an A up, in parentheses, smaller degree of trend. A B down and a C up, okay? And the actual was 15,475 and the 786. And the futures, different than the cash, we did the Nasdaq, it was in the 618. The futures have done a 786 retracement, pretty darn close to an actual hit on the 786 retracement of the entire 5-wave decline from the November 2021 low to the October 13th. I'm sorry, from the November 21 high to the October 13th low. And again, our trigger was back here, and NASDAQ futures were the first to activate that trigger from the August 16th high, wave 4 high. That meant higher highs ahead. We got the 618, we got the 786. This would be a nice place for that thing to be terminated, if you will. Okay, so that is the NASDAQ futures. I think we want to look at big update here. Okay, the video on demand. We do Tesla, Bitcoin, SMH, and XBI, 55 a month. There's also lots of educational and trading videos in there. I'll let you guys look at that. Lots of stuff there. But these 4 we update once a month at the end of the month. And since I'm gone for the next 2 weeks, starting Tuesday, I updated this weekend. So let's look at Tesla, because that's very interesting. Okay, I think we have a daily chart of that. Let me get all that into focus. I like to go back to the beginning. Okay, so back here in 2020, this was interesting to watch develop, but we had a 1 up, a 2 down, a 3, a classic contracting triangle. If you looked up in the dictionary, contracting triangle, you'd see this, okay, and that's a 4th wave. All right, A, B, C, D, E, lower highs, higher lows, and then a thrust out of the triangle, as R and Elliott would say, to give us a 5th wave high back in November of 2021 when a lot of the tech stocks topped, and including the Nasdaq index itself. From there, you see we have a wave A down, a B up, and a C down, and this hit right on the 786. Let me back out again so I can show you guys that. There's a 786 Fibonacci retracement. It basically hit it. Or if there was ever a signal to buy, that was it. Okay, because the risk was going down to here. All right, so anyway, because second waves cannot retrace more than 100% of first waves, but a 786 is a nice healthy retracement going from 414 down to what, 10 something. Okay, yeah, it is 101.81. All right, but from there we had 5 waves up for wave 1, 3 wave correction for wave 2, and we've got a third wave equals wave 1 right here at 1268, and it went just above that, and now we're getting a 4th wave correction. Okay, that 4th wave should hold above the wave 1 high, which I believe is 217.65. Let me get that on there. Yeah, 217.65. That's where that should hold to. Let me put this on here, see where it is right now. And it's at 256. It made a little bit lower low. There was a gap there, but we'll see. Let's just put this in there, okay? Let's do that Fibonacci retracement for this third wave from the wave 2 low to the wave 3 high. And the 382 is 229.38. The 50% is the 214.46, and that would be below the wave 1 high. So let's look at 229.38 for the Fibonacci 382 correction for wave 3. It's a 4th wave, so expect something long and sideways because that's what 4th waves do by nature. Let's remove that. Okay, and we've got Tesla done for the, let's get back into the subscriptions here. That was the video. That was just one of the 4 video on demands we do, in addition to all the educational and trading videos and charts in there. We also have auto trade, which you can see right there. That's something totally separate. But you guys can do that if you want to. They being Striker, auto trades, my signals I give to them. Okay, let's get into the ES. All right, let's see if I can get into, this is very similar to the cash S&P, obviously 5 waves down for wave A, and then we've got an A up in parentheses, a B down, and a C up. Okay, and again, this is just below the 786. There was that trigger from the August high. It hit, showed us there'd be higher highs ahead. It hasn't hit the 786, which is 45.27. It's hit the 44.93 again on June 16th. There's a gap there to fill. That's 42.98.25. And the downside trigger becomes the A wave high, 41.80, to look for lower lows. And the upside trigger has already been, activated. And so far, that is the high. Let's get into the hourly chart here. Okay, let me get into that. Here's our, this is the last 5 wave advance. Okay, let me see if I can get into this here. I'm going to show you guys, go back a bit. Okay, back here in May, again, I think I've said this lately, but it bears repeating. We had a 3 wave decline, and right away, so that's 3 waves down. The main trend is up. We should get 5 waves up. Okay, you know, 3s are corrective, 5s are impulsive in the direction of the main trend. So we have 1, 2, 3, a classic triangle here, a 4, and then again a thrust out of the triangle, as R.N. Elliott says, which gave us 5 and a larger wave 1. Okay, and then we would need to see a move below that high to look for lower lows. Okay, we got a wave 2 up, and then we got a 1, 2, 1, 2. I need to slow down to get all that in and squeeze this in down here. There we go. And by the way, this 2 was a direct hit within a point there, and that is a downside trigger on a larger degree of trend. But we had the 3, 4, 5. You can see the alternate in blue because this 3 gains equality with that 1. This could be a 4, and that could be a 5. We'll have to see how this plays out. Obviously, the 44.93 high is the trigger for any higher highs, and you can see this breaking down here with an A, B, C so far. And of this 5-wave advance, here's the Fibonacci retracement targets. 382 is 43.4850. 500 is 43.0375. And the 618 is 42.59. That is of that most recent 5-wave advance from this low back here. Okay, actually it's back there. There's the 1 in parentheses. There's the 2 in parentheses. And there is a 3. We'll see if this is a 4 or a 5. I'm sorry, that's the 4th wave corrections from that low back there. Okay, let's see if we can, that's the same chart. Yeah, I wanted to show you guys this. This is interesting. There's a lot of different ways to count this, but the trend from that high back here on June 16th, obviously we are getting a slew of lower lows and lower highs. And we put this out last week. Okay, we wanted to see a move below that wave 1 high to activate lower target triggers, if you will. And we got that, and then we needed confirmation with the move below the beginning of this, because this is 5 waves up. You can see the little small marks there. There's 1, there's 2, there's 3, there's 4, and there's 5 up there. Okay, trigger here is obviously this 44.93 high, and there's the targets if it goes above it. And we hit the first trigger. We needed, again, confirmation there. And this was before Friday, and then you can see this is Friday's action here. And Friday it actually gave us confirmation, went below there, and then went higher to shake out the shorts, as they always do, right? If they're going to take it down, they're going to move it up first, shake out the shorts, and vice versa for the longs. But there's lots of different ways to count this, but as you can see, the trend is down. That's on a 10-minute chart. Let me get the report there. That was Friday, midday. Okay, here we go again, out of office. There's the importance of those targets and triggers. Okay, and there was the confirmation we needed to see. We pointed that out to our monthly subscribers before it happened, and you can see right there is when it kissed it within a half a point, and then later in the day it went below it. Okay, so we should see a continuation of that. I'll work on a wave count for that before I'm out on Tuesday, but there's the upside trigger and targets there, and there is a downside trigger, which was achieved, and there's our targets there. Okay, and that's where at that point in time we were within a half point, but we said that it should it will still most likely breach that low as early as today's session. This was Friday's report, and sure enough it did. So that monthly subscribers are on top of everything. We try to keep them up to date with the shortest degree of trend, usually 10-minute charts, sometimes hourly, sometimes 1 minute, but we don't want to be whipsawed. So we give triggers and targets, and when the triggers are activated, the targets are achieved, as you can see right there. So we're still waiting for the first one, but this thing just reached that confirmation late in the day, I think in the last hour of trading on Friday. Let me get back to that and see when that happened. Yeah, that was at 1500, and the market closed at 1600, so in the last hour. Okay, that's what we're looking at here. I'll try to get some reports out while I'm out. Been updating about once a week. Hope I can keep that pace up, but if not, be back on July 11th or July 12th, and we'll continue. So hope this is helpful, and until next time, take care, everyone.